You're listening to Lyfe and Shyt. I'm Daneyel Walker.
And I'm Tommy Walker.
Join us as we talk about our journey overcoming fears, boundaries, marriage, family, lifestyle, business, and whatever other shit you can think of.
We're individuals that came together to create one unit with one mind and one goal. What's up, baby?
Hey, what's going on?
I was acting like I was hiding something from you right now.
Is that what you were doing?
Yeah. It's like the remote to the TV kind of hide. Like, don't touch a fucking remote.
Why would you hide the remote?
Nah, it just caught me at last minute.
Silly.
Very excited. We got a special guest in the house this week. Actually in the house with us.
Yes.
My man, Tim Callan's in the building with us.
Woo.
Callan Capital managing partner. We're going to talk about that, and we're going to introduce Callan Capital and what Tim does. But I got a question for you. Mm-hmm. If you had to start a new business tomorrow, and you only had $1,000 in your pocket, what would you dive into? What kind of shit would you get involved with?
That's a great question. I don't know. My goodness, $1,000. I'd probably invest in you.
Me? Really? Okay, that's dope.
Go get the money.
Go get it. Yeah. Go out there and hit them streets, boy.
What would you do?
I would do what I did 6 years ago. I would hop into real estate. I would get into real estate sales. That's how I started real estate, was with $1,000, but I didn't have it in my pocket. I had to go borrow it from my uncle. And I offered them a 10% interest on it.
Oh, that's too funny. So, I remember that.
Yep. And so I called him up. I was like, I need $1,000 to start this business, and I'll give you 10%. Give me like 3 months. And he was like, all right, cool. And no lie, I paid him off in 3 months, gave him the 10% interest, and that real estate business actually launched everything else that we do.
That's right. And I see that's why I would invest in you.
Oh, that's good. Tim, how about you?
Yeah.
You had $1,000. What would you do tomorrow?
I think I would try and find a way to, quickly double that. And I'm just thinking of ideas. And you're talking about, you can go into different countries, into Mexico, and import different things for a lot less. So I was in Tokyo and I bought a really nice 25-year whiskey for $300, and I came back to the States and it was selling for $1,500 a bottle.
Shit.
Now you can't, they set up custom, so you can't do that in a very scalable fashion, but you can take $1,000 and do a couple different things and double it. But once you start trying to buy hundreds of whiskey bottles,
then that's what
they're going to shut you down.
But you know what? That's a good way to put. If you think about the basics of taking something small and cheap and then flipping it, that's how you start a business right there. So for everyone, just to let you know, Tim Callan is the managing partner of Callan Capital. Tim is from Anaheim, California. Grew up there. Has well, we ain't gonna talk. Danielle's gonna get into the family portion of it, but beautiful family. We're actually friends. We're both part of the entrepreneur organization here in San Diego, our chapter. So that's how we knew each other. But Tim's a fucking rock star. Like from his contributions to charities. One charity in particular, Peers, I would like for you to talk about that one and everything that you do, because it really hits the San Diego community in a different way. Manages wealth for all the big dogs out there. Did some time with Merrill Lynch. Did some time with Charles Schwab. So it's not like you didn't pick up a YouTube video and learned how to do this shit. You actually did this shit for real.
True to it.
And went to school for financing and been managing your company since 2007 alongside your brothers. Runs 2 operations from San Diego all the way to Texas. Got a team all across the country, and do a lot of cool shit in between that as well. I mean, like from skiing to like this. I see him. I was like, yo, your arm is, what's up with your arm? He's like, oh, I was skiing last week. And I was like, damn, I'll be back out there in a couple months. I was like, damn, all right, that's pretty dope. So Tim, welcome to the show. We love you. Appreciate you.
Yes. Great to be here.
I didn't know you ran your company with your brothers. That's pretty cool. Family business. That's
I'm the youngest of 3.
Oh, that's okay. And all 3 of you guys are in the business. You guys run it all together.
Mm-hmm.
Oh, I like that. How's that been?
It's been good. I mean, business has been good, but if anybody is working with a family business, you guys are spouses, so you kind of get the idea. But there's definitely some things that go with that.
Yeah.
That aren't ideal.
Yeah.
But at the end of the day, we stay in our lanes and we do well together.
Ah, that's important, staying in your own lane.
Yeah.
Yes. And it makes for interesting conversation all the time, right? It's like you kind of don't have a break of when it's like business or personal, or it's just like kind of you just talk all the time, right? So I can imagine how Christmas and the holidays are.
Yeah, for real. Well, that, and then the youngest of three.
That's right.
And so how, like, all right, you said stay in your lane. How's that, like, because being the youngest brother, I know I look at my young brother, I'm like, check this out, homie. So how's that narrative look for you guys? Like, how do you, what lane are you particularly in? What are the other two in? And then how does that respect look for you guys?
Well, it's taking a lot of money in third-party consultants to help us figure this out.
Consultants, not therapists.
That's right. Because, we all try, we're all kind of the Indian of the tribe, and we're trying to run things. And what we've quickly discovered over the years is that we need to bring in third parties to help us run this company. It's gotten too big for us just to be running it without some of the feedback from other professionals in the industry. And so they've kind of helped us, really figure out what we're good at, what we like and what we don't like. So a lot of times you're good at something, you just don't like it.
Yeah.
And so they've kind of helped coach us through that. And what we discovered is my oldest brother and I are very similar, A personality, and we have that dominant gene. We take those Myers-Briggs tests. And my middle brother is very passive, and he likes to work with people internally. So Trevor and I are relationship management, business development. So we go out and try and bring in new clients, and we manage the clients themselves. I also head up our investment committee, so I lead the group in deciding what investments come into and out of the portfolio.
Okay.
And Trevor is primarily focused on the business development and the sales side of our business. Ryan manages all of our employees, and he is oftentimes the third party kind of referee. That, he's stepped in as more of a CEO role. And when Trevor and I have disagreements, which we often do, he will be the tiebreak. So without a third brother, it would have been much more challenging.
I can imagine.
1,000%.
I can imagine. And then this third party advisors that you have, is it kind of like an advisory board that you've kind of created?
More third party consultants. So we have business consultants that help, and then there's other folks that are really good at personality and helping you make these decisions. As we were starting out early in the process, we didn't have this set up properly. And Trevor and I were kind of, at some point, almost battling to see who really ran the company. And the consultant came in and says, you guys don't have that personality. It should be your middle brother, Ryan. We didn't even think about that. And so he's coming in, and he makes a lot of the hard decisions when Trevor and I can't agree on something.
I love it.
That's pretty fucking dope, yeah. So with that said, then let's talk about Callan Capital. Like, specifically, what do you do? What is Callan Capital known for? And just let the people know what they can expect if they ever seen you in the street wearing dressed the way you dressed, because you're in San Diego looking like you're on Wall Street right now.
I know. That's right. So Trevor, Ryan, and I started the company in 2007, wealth management firm, as you mentioned. Prior to that, we were with Merrill Lynch in their private banking and investment group, which is Merrill's kind of dedicated high net worth wealth management channel. And we wanted to roll out and start our own independent boutique firm that caters to high net worth and ultra high net worth. So we did that in 2007, if you can take your time back to 2007.
That was a great time to do it.
It was a heck of a time to launch a wealth management firm.
Yeah.
So, we've all had entrepreneur experiences, and that was a very challenging situation for us because we couldn't inform our former employer that we were leaving, because then they would immediately walk you out the door and shut everything down. So we had to plan the business, setting up the LLCs, getting our staffing, getting our space, all of the insurance, all of that had to go on very secretively before we left Merrill Lynch. And then we left on a Friday afternoon and submitted our resignation paperwork. But in wealth management, like I said, it's no 2-week notices. Like, you are out. Security is going to push you out because there's a lot of confidential client data that they don't, you can't take along with you, for obvious reasons. So we left, and then started the company not knowing if a single client would come with us. And then it was just picking up the phone, introducing our clients to the fact that we left and started our own business. And if they asked, how can we possibly continue to work together, then we can provide that information, but we can't solicit. a lot of rules that go on behind the scenes. So that's how we started the company. It was a very stressful time. And, not as many clients as we expected 100%. But what ended up happening is our clients would say, well, you're going to go start your own business in wealth management. Like they've heard of UBS, they've heard of Morgan Stanley, Merrill Lynch, Goldman Sachs, but who the hell is Callan Capital? So it took a while. And then so we didn't pay ourselves for the first, year or so. And then the credit crisis hits. And the markets are down, over 25%, peak to trough, almost 40, 50%. And so it was a very stressful time not taking a paycheck and watching. Now, I was single, living in PB. I could make it happen. My brothers had kids. So from their perspective, they had a lot more stress.
Oh, yeah.
Their wives weren't pulling in any income. But it actually, in hindsight, turned out to be a good thing because if you remember back in those days, Merrill Lynch was all over the news and ultimately almost went under before Bank of America came along.
Saved them,
and bought it right around $3 a share. So we had this chart in our office that said, it was a stock chart. It said Callan's leave Merrill Lynch, and it was trading at $96 a share. and then all of a sudden it goes down to $3 and BofA buys it.
I love it.
But it was a wonderful, wonderful company. I only have great things to say about Merrill, and it still continues to be to this day. But we actually benefited from not being part of the news and what was going on with all those major banks and brokerages. So we brought in a lot of assets during that time between 2008 and 10, and then kind of catapulted out of that situation to where we are today.
Jeez, patience.
Okay, that's a hell of a story. Yeah. Hell of a story. I want to ask you some questions, some personal questions now. We talked about a little bit of business. What are some family values and things that you used to do as a kid that you still do now as an adult that you brought into your family?
So as a kid, I was raised by a single mother. My parents divorced when I was 3 years old. My dad moved to San Francisco. And so my mom, she was an entrepreneur. She ran a music school, giving lessons for various instruments. She had about 600 students and teachers that she would use to train these students.
Man.
And so growing up, I played a lot of different instruments, but nothing really stuck, to this day. But guitar, drums, piano, and trombone. So nevertheless, my appreciation for music and going to see live music continues to this day. But I think to your question on what are some of the things that came out of that situation is my mom was working really hard, and she wouldn't come home till 5 or so at night. So I would get home from school at like 2 or 3, and then we had to have childcare for a couple hours while she was out, making money for us, so we can live as a family. And so she taught and instilled some of those values on me about being a business owner, busting your ass to make things happen.
Oh, hell yeah.
And she did well. She ultimately sold that and retired, and now she's in La Quinta.
Wow, that's dope.
Hell
That
yeah.
is dope.
Yeah.
And then do you still speak to Pop, or how does that work out?
He passed a couple of years ago.
Okay.
But yeah, he was always active from the perspective that back in those days you could fly, as a young kid, 5, 6 years old, where my mom would drop me on one side of the gate, you can go all the way to the gate, and the stewardess would grab you, walk you on the plane, and then on the other side would be my dad waiting. So you could do that as a young kid, whereas you can't with security these days. But nevertheless, I'd be visiting him once a month up in San Francisco, and then he moved to L.A.
I remember those days where you could walk all the way to the gate.
Yeah.
I used to get walked to the gate.
Okay.
Yeah,
I didn't fly back in those days.
Yeah, when we was going down south to visit family, it was like, you damn near walk on a plane with the kid. But now.
Yeah, exactly. So
that's cute. That's funny. Yeah, sorry. So what would you say is one of your most rewarding aspects of your career now, or what you do?
Ultimately, what we do is help provide peace of mind around family finances. And to the extent that we can do that and give people the comfort to go out and make that decision to buy the house, buy the boat, retire early. And the biggest reward is some of those discussions that we have that, look, you don't have to keep working if you don't want to. At this point, it's a work optional lifestyle. And people just light up because we're all trained that you got to keep driving for as long as you can. And to tell people and give them that comfort that they don't have to do that anymore, or they can make whatever purchase it is and feel comfortable. That's the peace of mind that we offer.
I love that. I love that. Can you share an example of something that you learned through a recreational experience? I know you like to surf. I'm sure you had a lot of good surf experiences or any other experiences that you want to share that you learned.
Yeah, my 3 favorite hobbies outside of when I'm out working is surfing, skiing, and sailing. As Tommy mentioned, I got a lot of ski stories. I've taken it down a couple notches as I've figured out that I'm no longer 25 years old. I can't keep skiing like I was 25. So I tore my shoulder about a year and a half ago, is what he was alluding to in the beginning of the show, and it's been a bit of a wake-up call, but I used to go, and I probably still will, but go heli skiing, be up on top of these gorgeous glaciers in Alaska, and that's some of my favorite moments of my recreation.
What is it called?
Helicopter will take you to the top.
Okay, heli, okay.
Heli skiing.
And then you just ski down.
Yep.
Oh,
and then it drops you off and then goes down to the bottom, picks back up
the
again.
fact that a helicopter has to take you up
exactly.
there. The only reason I didn't ski is because I looked at the ski lift. I was like, I'm not going up there. So helicopter.
Yeah, we booked a whole trip just to go skiing. It was like the first time we go up to Big Bear, not even like crazy. And Daneyel looks at the lift, was like, nope. We're not doing it. I'm like, this whole thing was revolved, like we were supposed to go skiing. And she's like, nope, I'm not doing it.
Looking back now, I wish I would have done it. I didn't do it then because I was afraid of heights, but now I'm not afraid of heights. Is that crazy? Like I literally talked myself out of being afraid of heights because I figured that fear, like the root of all fear is death, right? So I was really afraid of death, not of the height, right? So I tried myself, like, let me go to these, let me take myself all the way up and see what happens. Now, roller coasters, I just don't like roller coasters. I thought that was, I had a fear of them. I just don't like it. I don't like the way they make me feel. I don't like the way my stomach feels afterwards. But heights, I'm okay with going high. I like that. And I just got over it. So now I can do things that require you going high. But, yeah. I mean,
I'm afraid of heights, but I just... Like you, just keep pushing through it.
I'm afraid that I'm going to die when I'm up there. So I think that it's like, I'm going to die anyway, either way. If that's the way that I'm going to die, then so be it.
As long as you're doing it, I'm doing fun.
Yeah, I'm not going to do it because I'm afraid to die. Anywho, the last question that I have for you is, and this is a trip, if you've ever had one of those dreams that you've woken up from and you're like, oh shit, either... It's sometimes you could be mad at someone, like you had a dream they did something to you and you're like, I can't get over that. Or it just changes your perspective. Like, oh shit, I never thought of things that way. Have you ever had a dream that way that kind of impacted your waking life?
I think the closest way I can answer is I have a 7-year-old daughter. And so there's been certain situations where we probably all had this, but just, having the one daughter where something bad, where she gets hurt, happens in a dream. And, you wake up and you think, okay, how can I be the best parent possible? Allowing some freedom for adventure, but still protecting. There's that fine line. Because if you're that sort of parent that hovers over and doesn't allow them to do anything, that's going to backfire as well.
Absolutely.
So it's hard, it's hard to find that line. And she's a big climber. She climbs on everything, but she's also super scared of heights. So what you were saying, there's that climbing wall down the street here off the 163, and I took her there, and she loves climbing, but she'll get up about 6 feet and freak out. I'm like, you're strapped in. You're fine. So we're working on that with her. But
Don't be a Ned Flanders.
Yeah.
You remember Ned Flanders?
Yeah.
From The Simpsons?
Yeah.
Daneyel used to be a huge Ned Flanders with our daughters. And I'm like, calm down. It's okay.
So I was a single mom for the first 5-6 years of their lives?
9 years.
9? Well, that's significant. So it was just me and them, I was very okay, huddle, ladies. We're all girls, right? So it's like, okay, no, don't talk to strangers. Don't even look at them. Don't look, walk straight.
Across the street.
My biggest fear is someone knowing that I'm a single woman with 2 children following me home. As a single woman, there's a lot of things that you kind of get, crazy about. And I had to make sure that the girls were,
protected.
Yes.
Yeah.
Right.
But shit, man. When I came in the scene, I was like, whoa, calm down. Dad. I was like, calm down.
They would literally cross the street if someone was walking on the other side. They're like, oh, a stranger. Walk across.
Stranger
He's
danger.
like, calm down. Everyone's not going to get you.
Everybody was weird.
It was a little extreme.
But it's that fine line we're talking about.
Yes,
right?
yes. Now that they're older, shit. I'm like, remember stranger danger, ladies? Like,
Go back to that.
Yeah. He's a stranger.
You silly. Yeah, you wait for that when your 7-year-old becomes that 16, 17-year-old, and you're like, fuck.
Yeah.
Gotta meet this dude. Who is this guy?
You hope you meet him.
Right.
Yeah, for real.
That's a different podcast.
So only one daughter. No other kids coming. Like any intentions on another baby?
No,
You
I
done?
was up for another one. Jackie said, "Hell no."
She's like,
we travel a lot. We have a lot of flexibility with one, and she said, "I think it'd be not good on our marriage if we had two." I'm not sure if she's right or not, but she made that decision a long time ago, and so it's been great.
that's dope.
Always fun.
Hey,
I can tell you, because 4 kids. Oh shit.
yeah, it's a lot.
It
is a lot. It is a lot.
I understand.
So we
I'm
talk
with
about
her.
entrepreneurship and money today, and being a wealth management advisor. What are some of the things that I mean? Because you talked about you started a company in 2007. A year later, if you were around that time, you was an adult. Because I was working in the corporate world. So for me personally, I was an employee, and I was promoted in 2008, and 6 months later, I was demoted because the company took a hit financially, and I was glad I didn't lose my job, but I was like, fuck, this was embarrassing. So you as an entrepreneur, you start a company. I'm sure there was an embarrassing moment, and that's one thing is with entrepreneurs, like we don't never expose how embarrassing some things are. Like we keep that shit under the carpet.
Yeah, it's like failures, but they're like our successes because they made us better.
Made us who we are,
Yeah.
right? So going through all that, like what was, and you're in the finance world, so you're going through financial issues and in the finance issue at the same time. Like, what's your mindset like? What's that journey like going through that?
Well, it's in a time like that when you're not taking in income, it's obviously a very stressful period when you have obligations and bills and mortgages and things of that nature. So that was an area where, in hindsight, I look back and it was a dumb time to buy real estate before the credit crisis, obviously, with that hindsight being 2020. So that's one of the mistakes I had, is I had a mortgage and no income. But it could have been worse. I had just barely enough savings to kind of get by before we started getting paid. But as a wealth manager, being in that situation when that's exactly what we're coaching people to protect and give them the peace of mind that I talked about earlier. But here I was in that problem, and it's just because of the nature of starting a business.
And that's normal. Like I don't know if everybody gets that, but as an entrepreneur, you don't take a salary. You know what I mean? Like you don't get paid forever how long. And now if now talking to yourself, new entrepreneurs, it's 2023, right? And we talked about having $1,000 in your pocket and you having, the experience that you have. What would you tell an entrepreneur now?
Oh, yeah. That's what I was going to say. So venture capital or angel investing or bootstrapping, like which like revenue or like where would you tell people to go?
You mean if they're an entrepreneur and they're looking to raise
For
money?
a startup?
Yeah.
Yep.
Yeah, if you have the kind of business that can take in venture or angel, it's always technically best to risk other people's money over your own.
I love how people say that so easily.
I mean, you're not going to have all of the upside, but at the end of the day, if you can scale your company at a much faster rate because you have a paid or an investor check coming in, then it's a great way to go. So sometimes we have clients that will sell businesses and they have enough wealth to have that work optional lifestyle, and they ask a similar question: should I take some of this and throw it back in the company? Well, you can, and if it's successful, you'll be that much wealthier as a result. But is it worth having to go back to work again because it's a failure because you put your own money into it? So every entrepreneur can answer that question based on their existing situation. Some types of businesses you need outside capital, life science, biotech, for example. You can't get through clinical trials without $100 million, right? And now people construct that check, so they have to go out to the venture community. So it just kind of depends. But if you're doing a coffee shop, you could probably afford to pay it depending on how extravagant it is.
1,000%. And, and I'm glad you said that, because in our first cafe, not very extravagant. That was, we had business partners in that one, and we funded that whole thing. Everybody put in about $11,000. And the cool thing was we had partners that was contractors or grew up working with their dads doing, work. So it worked out. Our current coffee shop, it was all contractors, and it's a very exquisite place. It's very nice, and we spent way more than $11,000. and now would I have looked at investors for that one? Probably not, because with coffee shops, you don't, unless your intentions are to become a Starbucks, you know what I mean, then there's no real reason to look for investors.
Yeah, that's true.
And of course, our intentions are to grow this thing as big as it could go, but we bootstrapped the whole thing. The only thing is, when you go to the bank and you think, oh, I'm a small business, and that's the thing, people kind of get mixed up. Because I had a conversation last week with someone who's looking to start their business in plumbing. And he said, oh, well, I start the LLC, I'm going to go to the bank, I'm going to get a loan, they're going to find. I'm like, no, it doesn't work like that. And that's the thing that people kind of get mixed up a lot, is you think that banks finance startups. No, you finance the startup.
Right.
And then you have to prove yourself. What are some of the financial pitfalls that you've seen with entrepreneurs managing, like, damn, you had the shit right and you didn't listen to me?
Well, particularly if you're taking outside investor money, you need great legal counsel, because you could set up a situation where you lose control. And that happens a lot. Either you sell too much of the business and the investors then have a different vision for your business. And maybe that's what you want, because you want to sort of exit. But if your intention is to maintain control, I mean, I think the best example we've seen of that is Zuckerberg, Facebook. We've all seen the movie about how.
Or Steve Jobs, he got fired.
Yeah. But Zuckerberg's in a situation where it's going to be difficult to fire him, because he had such great counsel and was able to maintain control and have all the voting shares and all those types of things. Now, as an investor, you don't want that, right? So there's that battle, because you don't want the entrepreneur to have all that power. What if they start turning in, like the guy from Uber, becomes a liability, and you want to get him out. So it's a difficult juggling act, and you just need to have good legal counsel on the front end and make sure that you don't give too much away.
I love that. Now, how do you balance it? So say you start making profit, right? Now, how do you balance whether you invest in your business or you invest in your personal stability? And like, what are your tips in how to do that?
Well, I think we always will make the most money on ourselves, right? And me, as with my company, Callan Capital, I'll make more than my investments outside of Callan Capital. And you guys have the same situation going on with yourself. Mm-hmm. But there comes a point where you need to have a little liquidity and diversification outside of your business. And so at that point, the best way to start saving is in tax-deferred retirement type accounts. So think of 401k, defined benefit plans, those types of areas, because you get the tax deduction, you get the tax deferral. It's a very difficult environment to beat when you're not getting that constant tax that you have to pay every year in and year out. Once you max out in those areas, tax deferred areas, then you start to invest on the after tax side. And so those would be kind of the orders. Invest in yourself. Make sure you have the hierarchy needs. So you got to make sure you have what you need to live, your house, your food, and then you invest in yourself. Then you invest in a tax deferred environment, and then in a taxable environment.
I love it.
Why did you get into finance? Like, what was it? I mean, mom was an entrepreneur. What did dad do?
So he was ad sales for Newsweek magazine.
Okay.
Up in it's a big magazine back in those days, but he moved to San Francisco to take on that role. And then subsequently went to LA and kind of stayed in ad sales. But he definitely wasn't an entrepreneur, and retired, frankly, way too young without much money. And so we had to make sure he was okay towards the end of his life, because he got dementia, and we had to put him in facilities at that point. But mom's always been much more financially stable, and she's doing well and looking to saved up enough money to pay for her needs. So
Is that how? Is that where your training came from? Or?
Oh, so then in finance, just always, even growing up in high school, I've always been a big investor, or not big investor, but trying to find ways to make money with my money as an investor. So first I went out and scalped tickets at various sporting events. And my dad was, he would get a bunch of tickets for his clients, and if he didn't give them all out, he would give them to me, and I'd go sell them. And then,
So smart.
yeah, and then I started a little bit of a side business, and I hired friends to help with that, and saved up a little bit of money. And then somehow my brother went straight to work at Merrill Lynch when I was just going into college. So I took my little savings from scalping tickets and I bought Oracle stock, and then that went up, in '99. To this huge number. Yeah. But the other lesson I learned from that is I didn't sell any of it. And then the tech bubble burst and it went right back to where it started.
Oh, that's funny.
So that was my kind of first foray into investing. But my oldest brother started Merrill Lynch in '94. So when I graduated college in '99, I initially went to work for Charles Schwab and then moved down and joined his group, and that's how we kind of got started in the business. So that was in 2000.
Right.
I love that.
It sound like you selling walnuts.
Yeah, right. Yeah, exactly.
and getting your friends and brothers and sisters involved.
Yeah, the first business. It was a hustle, right? It's like, hey, y'all, this is how I'm making money. You guys can make money with me if you want to, right? And they're like, oh, hell yeah. So it's like, let's go.
That must be a West Coast thing. Like everybody on the West Coast just sells a commodity to make more money.
I mean, because I sold candy at the street fairs, and then I sold my lunch tickets because we used to get a bunch of lunch tickets at school, and then it was a whole line of people who were buying lunch. I was like, wait a minute, this doesn't make sense. It's like I got 10 tickets. Here you go. Here you go. Here you go. Go get you some lunch. Give me the money.
I think that is the most
I can
gangster.
go buy my own lunch.
You was selling free lunch tickets as gangster. Like that's truly West Coast shit. Because on the East Coast, we was using those free lunch tickets to eat free lunch.
I was going to Jack in the Box too for one tacos.
And then our businesses over there were shoveling snow and cutting grass.
Oh,
like we wasn't selling anything. We was laborers.
Yeah, that makes sense. Hey, Tim, what advice do you wish you had then that you could have used now?
I think that there's a lot of people out there that aren't encouraged to become an entrepreneur, even though that might be a good direction to go. Now, not everybody's built for it, and it's frankly not the best way to go because it takes a lot of risk, and more businesses fail than succeed. But
Damn, that's impactful. Ouch.
But I think, I think that having somebody encourage me at a younger age to go start my own thing, which I think a lot of young folks don't have that. Mm-hmm. That's something I wish I had, because it's better to fail early, right? Yeah. And especially when you're young and it doesn't matter that much from a finance perspective. You don't have a house and family and all that. So I wish I took some bigger swings younger.
That's real talk. With today's ecosystem, it seems like raising money, because you said like in the bioscience world, to get through clinicals, you need 100 million. Like to even hear numbers like that. Mm-hmm. And then to hear these companies raise money so fast and then sell, it almost sounds like the rich getting richer, kind of a mindset, right? Is that skewing what's happening in the ecosystem? Like, is that really, or is it legit? Like, is people raising money, or like all these companies legitly raising money, doing good work? Or is it a scheme? Like, if I'm a new entrepreneur and I'm hearing people raise 100 million, and I'm like, well, shit, how do I get 100 million? And I go to the street and I'm like, hey, I need money for this idea. I'm like, get the fuck out of here. It ain't worth it. You know what I mean? It almost seems like there's some gatekeepers or like what's happening out there, and how do I get through it? From a brand new entrepreneur that don't know what it's like to raise $100 million and don't have the backing and the support or advisors and consultants to break through that.
I think a lot of folks initially start at large companies and learn their trade and then roll out to start their own business. And at that point, it's a lot easier than if you're just trying to raise money without a track record. The people that are able to get those types of sums from venture capital firms have a track record. And they've done it before. Maybe it's a doctor that's working at the university and he's got a drug that that show some efficacy in some area, and so they're able to raise those kinds of big dollars. But to try and just go out and raise a bunch of money with an idea without having started small and showing a track record is difficult. As an investor, if I've invested with somebody and they've done me very well from that deal, the next time they come along and ask for money, it's like you can't.
There you go.
You can't get your wallet out quickly enough, and that's how those bigger fundraisers are, because somebody's done it.
And that's a good point. That's the thing that I think we miss is they've been, nobody's overnight. Like it ain't like the guys that are getting 100 million, they put in the work, they're putting the research in, or they have proof of concept. Yeah,
lots of work. Like I said, there's no such thing as an overnight success, right? They've been doing it for 10 years, and it just so happens that you know them now. You know, they've been putting in that work. It's crazy. We recently did a podcast on CEO compensation, right? And how that works and how we do that. What would you say is your approach on salaries and your compensation?
Well, as a business owner, it's my compensation is profit distribution, so that's a little different. Are you talking about how you compensate your employees?
Well, as far as yourself and then also salary, so the same. Well, different, both. How you compensate yourself as a CEO, and then also how you do salaries.
So I personally have a salary that's in line with the market, and then when there's profits, I get a profit distribution. So the bulk of my income comes from profit distributions as a business owner, but I get paid the same as an employee would get on the salary side that does my role. So that's how we've kind of, again, a lot of consultants have helped us along the ways. And in terms of how we compensate employees, we always want to be on the high end of comp to attract the best talent and to have the least amount of turnover in that space. And so we've, again, from learning from past mistakes, being on the higher end of comp has been really great for us. And we've had very little turnover in our employee base. Losing employees is such a pain. I mean, especially if you get through some period of training and then they're out. It's just a massive drain of energy and money. And so that's how we try and get around that. And, obviously giving people good perks.
Yes.
I mean, starting a business during the real estate crisis, running a business through COVID, what kind of leadership skills can you say that you have acquired over almost 2 decades of doing what you've been doing that has helped you be successful? And what can you tell up and coming entrepreneurs who probably won't see a real estate crisis and who probably won't see another pandemic for another 90 years? I mean, you've gone through 2 major, troughs, and how do you get through that? And what if you was a coach today, what would you tell someone from a financial standpoint and from a leadership standpoint?
That these types of things happen in the economy, once or twice a decade, and we will have another crisis. We just had the pandemic, right? And that was a big deal for a lot of people.
That's true.
And but what always ends up happening time and time again is that things correct themselves and come back out the other side. It's just, can you make it to that point? Are you solvent? Have you enough liquidity to get there? Because it will come. And so it's just, hunker down. There's light at the end of the tunnel. It will be better, but you just got to wait this one out. And it works. I mean, we have a lot of folks that when they're investing, and particularly there's a lot of emotions behind money. And so part of our job,
1,000%.
part of our job as advisors was we're disconnected from other people's money because we don't have the same emotional connection to somebody else's money, right? So we can coach people through these situations by saying, look, just stay the track. You'll be fine. You'll make it out the other end as long as you don't sell to go to cash at the bottom of the pandemic. If you do something like that, if you act out of emotion, when you see, your portfolio is down 20, 30% and you knee-jerk, oh, I can't take it anymore, I'm going to go to cash, it blows up your entire financial plan for the next 20 years. You never recover. And so it's a lot of just emotional, keeping people going through the process, and it will get better if you can stick it out.
ooh, I have to go a little spiritual here and talk about the sacral chakra, and that's where your emotions flow, and that's where money flows. So if you ever have to make some like huge money decisions, then I would take a little time, maybe do a little meditation in your sacral chakra area, kind of clear that space, kind of open it up, and then you'll kind of clear your mind for those decisions that you need to make.
That's
Side note.
Yeah.
And that's real shit. Because you tell me that all the time. I'll be like, babe, this is where we at. This is what's happening. You know, we have our ups and downs. We got multiple, some businesses. Yeah, we've had businesses where one was doing great, and the other one was doing terrible, and then it flipped, and then that was doing great is doing terrible, and the other one. So, and every time I tell you, you be like, all right, calm down.
Yeah.
Release. Let's breathe. And I'm like, oh, thank you.
Yeah.
Having good support at the home is important.
Yes, yeah, that's true. That's true. And I'm always telling him it's no pressure. You know, like I could live a lot of different simple ways than I have before. You know, as long as I'm with him, I'm okay and I'm happy.
Right.
So it's like no pressure. Let's just, as long as we're having a good time and we have fun with whatever we're doing, then that's what matters. He's like, no, still pressure, but it's not on me. It's not from me. So
yeah, that's true. That's true. Yeah. So for an entrepreneur, how smart do you need to be in finances? like that's part of because none of us go to school to be an entrepreneur. We go to school for I have a degree in business administration. That's my degree, and I don't use that degree at all. Every day I get up and I say, all right, we're going to try this. And then I learn, the way I learned the books and QuickBooks and accounting. I did learn that in school, but I'm like, that was so long ago. It wasn't even QuickBooks Online back then. I had to learn all this shit now. So as an entrepreneur, how smart do you have to be in finance? At what point should I go get some type of consulting in finance? Or when should I call Tim and say, fucking help me, please?
You're smart enough to hire help.
Look, you got to hire what you're not good at. If you're not good at finance, doesn't mean you're not going to be a great entrepreneur. You could hire other folks that are great at finance to fill that void, and that's what people do with CFOs and that kind of thing. So, entrepreneurs come in all shapes and sizes, and they're good at all different types of things. Finance is important. It's one of the most important things, to be good at if you can, because it's your own money when you're the business owner. But if you're not, that shouldn't discourage you from not taking that shot.
Okay. Because that's everything. Because I don't all these books are so confusing, or spreadsheets are so confusing.
Right. I think if you love what you're doing, you're going to do well at it. And if you don't love that kind of thing, then stay away from it and surround yourself with good people that do like it and do love it, and we'll help you get to that next level.
Operating that genius zone.
Yeah, be good at what you're good at, right?
So and that sounds like that's what you guys did between you and your brothers. You had to find out where your genius zone was, and then operate there.
Right.
So y'all wasn't wrestling in the conference room.
That's right. That's right.
I love it.
Yeah.
Tim, at the end of each episode, we always give a final thought. We talk about whatever, gave us the most value in the episode. So Tommy and I are going to tell our final thought, and while we do, think about something that you'd like to kind of close the episode out with.
Okay.
For me, my final thought is, in the old days, people would call men who saved, or just women and people who saved, misers. You guys remember that saying, old miser? But nowadays they say it's a wonder. Who saves anymore? This is an anonymous quote. So to that I say, save people. No one saves money anymore. Be a miser.
It's true. That spend that shit. I ain't taking it. They say I ain't taking it with me to the grave.
Yeah. People got real. I can't. So that's you can't bury it with me. So hey, all this. Let's have fun, but save, please.
That's real shit. Well, to your point, entrepreneurship and finances, it doesn't come down to dollars and cents, and then to what Tim said, it's really about the passion. At the end of the day, I have a lot of conversations with emerging entrepreneurs, people that want to be entrepreneurs, and one of the biggest things that keeps them from leaping is, I don't know how to, and it's well, fuck that. Like Tim said, hire the people to do that. Like, get out there, do it. You know, have the audacity first. Have the audacity to stand up and step out. And then once you get good at whatever it is that you have passion about, then you just hire everybody else to take care of it. And 1,000%, that's what we've done. We went from doing everything ourselves to now saying, all right, let's hire the people. Like, fuck, we don't want to do this no more. Let's hire the right people. And that's what we've learned in all the different industries that we've been a part of.
A cool thing too is we got to try our hands at a lot of different things to see, like, am I good at this? Maybe not.
Nope.
I should probably hire somebody to do this. Am I good at
that.
this? I'm good at this, right? Like, I didn't know this, but this is like my genius zone, and I love it. So yeah,
exactly.
Yeah.
Tim, before you drop your final thought, where can people find Callan Capital? Where can people find you? Are you dropping any gold nuggets on social media for people to learn about, like, whatever it is?
Yeah, our website's www.callancapital.com, and we do put out various newsletters and things like that. So we have a page on LinkedIn that you can follow us, and that's primarily where we distribute that content. And we have a marketing person who pushes out pretty regularly. So
absolutely. Yeah. He dropped that gold nugget. We have a marketing person. He's not doing it himself.
It's not his brother. It's not yours. It's not.
Hire. I'm a finance guy.
Yeah, exactly.
What's your final thought on today's show?
I think along the same lines of what Danielle said is stay within your means. And if you're going to take risks, you should take risks, but make sure they're calculated risks. And they don't blow up your entire financial picture by borrowing a lot of money on credit cards and things like that. That's just not a smart, calculated risk. And so take risks, make sure they're calculated, make sure you understand what will happen if it goes the wrong direction and you lose on that particular bet. And if it's going to blow up your whole family and your whole situation, it's probably not worth it. But other than that, I mean, you're not going to make it as an entrepreneur unless you take some calculated risks.
Absolutely. That's great. That's life and shit.
It's life and shit.
Love you.
Love you.
Thank you, Tim.
Thank you,
guys. Do us a favor. If you enjoyed this episode, please subscribe. Leave a review. Let us know what your thoughts are. That's the only way that this show is going to be successful. And we appreciate you. Talk with you next time.